What's up, everyone? Dylan here. I wanted to hop on to do another episode of the weekly analysis video. With that said, we'll hop right into it. Going back to the last week, I talked about a hypothetical scenario that I was going to be looking at heading into April 2nd. One of the main conditions for that hypothetical scenario was that the bulls had to rally into April 2nd, where then it could potentially, result in a pivotal moment where the trend goes from positive to negative into that April 2nd Liberation Day, right? Explained last week. However, as you could see, that did not occur. Okay, so I outlined last week that the Bulls had one job. Their one job was to defend dips into 57.60, which was the previous week's resistance. Okay, previous resistance, right? Especially if it's strong and held multiple times, as we saw 57.60 did, should turn into support on retests. And clearly that did not occur. The Bulls did manage to kind of absorb some of that selling pressure in the beginning, but sellers did a very, very good job defending rallies up into the 56 or 57.60, 57.70, 75 area. And ultimately, every pop that occurred got sold into, and the sellers basically took back control. Okay. Then the next level down was 57.22, which was the weekend gap fill. As you can see, the Bulls did initially defend there, but again, they could not sustain value on the rallies. So as a result, price continued to sink. And then it even went as low as the previous week's lower extreme, which was 56.50 area, and it couldn't even defend that as well. So essentially, now we are back at the previous year-to-date low, which was on March 13th. So heading into today, I was looking at this level here, right? Basically, I said earlier this morning, I said the Bulls really, really need to now defend that year-to-date low that occurred on March 13th, okay? And as you could see, despite price coming down below that, right, you see that long tail, right, that long wick on the bottom side, right? What that indicates is that the buyers did a really, really good job absorbing that sell pressure underneath previous swing lows, okay? On top of that, there was also some bullish context as well in other instruments. So you also had some positive breadth, right, across different broader indexes and broader instruments, right? What do I mean by that? With the S&P making a lower low, you had RSP making a higher low, right? RSP is the equal weighted ETF, as if all 11 sectors within the S&P 500 were equally weighted. On top of that, you also had NYA make a higher low as well, right? What's the NYA? NYA is all of the different stocks that trade on the New York Stock Exchange. So they represent a much broader view of the overall market. So that's a good thing. The fact that despite S&P and NASDAQ futures and cash as well, right? SPY broke those lows, and so did QQQ. Despite those lower lows occurring, the broader market was making a higher low. So that's a good thing for the bulls. On top of that, you also had a nice positive divergence on the RSI, right? What do I mean by this? Positive divergence is when you have a lower low in the instrument, whereas the RSI makes a higher low. What does that mean? That means that as price is pulling back, relative strength index is increasing. So as price is pulling back, the relative strength is actually increasing, which implies that the move into a support level will be deemed as higher probability to bounce there. So again, yes, sentiment is very, very bearish. There's a lot of fear in the market heading into April 2nd. Ideally, like I said in the last week's video, I wanted to see a rally into April 2nd, where then I believe that was going to result into an opportunity where you could then fade that rally, right? Something like this, as I went over, right? That's what I was looking for. But obviously, like I said, clearly that is not the case. So I scrapped that hypothetical scenario that I, didn't do anything with, obviously, because it didn't set up correctly. And now we're dealt with what we have now. Okay, so Bulls did a good job defending that previous swing low on March 13th. However, the next area of interest that I was looking at was the support level that we've been talking about at 5650, which represented support 3 different times 2 weeks ago. So on the retest, right, we finally broke below that on this past Friday. And this was the first retest back into that area. So like I said before, previous resistance should turn into, new support. The same goes for the opposite. So previous support, right? Very clear support, 3 different, basically a triple bottom here. Once it broke, that area should now turn into resistance. And that's exactly what we've seen so far. Okay. So going forward in the near term, that's an area that I want to definitely keep a close eye on in terms of having a general gauge with price action around, right? What do I mean? The bulls want to sustain value or break above and then sustain value above where you want to see. The bulls want to see that price starts to get bought on dips back into that area where they can, make a move to 5720 would be my next area of interest to the upside if 5650 can sustain value. Why 5720? Basically, that was the lower end of the consolidation period before Thursday and Friday's large dip, or Friday's large dip, I should say. Okay, so basically I'm outlining previous areas of support and resistance to then gauge price for future tests that occur. Okay, because the last time we had the bulls being in control was very, very recently, right? The last time I did a video, the bulls were technically in control. Why is that? The fact that they were able to rally from March 13th lows, sustain value, push value up, and then for multiple days, they also defended dips at key areas, right? They managed to sustain value on this move to the sideways, and then heading into the following week, we're able to break out of that range, right? So that's very, very clear that the bulls had control. And like I said, they dropped the ball when they were unable to defend the dip back into that range pattern, okay? So now we're back to square one, in terms of the bulls. Going forward again, right, because we're back to square one, we need to start seeing that the bulls can withstand areas of previous support that are now turned into resistance. Okay, and what I do have to say is today was the last day of the quarter, where you saw some quarter end window dressing markup happening, right? And at the end of the day, at the 3:50 p.m. Eastern time, minute, there was a market on close order that came out for $12 billion to buy. Okay, and essentially what should have happened with a $12 billion market on close imbalance is that price should have been able to sustain value above this previous support, now deemed as resistance. So it came right into that 5650 area at 350 when that MOC order came out. So 350 was right here on this candle here, right? And you could see, despite a $12 billion market on close imbalance order coming out, what happened? Price could not sustain value above 5650, and it ended up rolling over. So that's not ideal, as the sellers did a really, really good job absorbing all of that market on close imbalance order. Okay, so Not ideal at the time of me speaking and doing this video, but going forward, I cannot rule out the fact that the bulls can still have the ability to sustain value over 5650. Okay, so if 5650 is able to get broken by the bulls and they're able to sustain value, the next level above that would be 5720. And same thing goes. You want to see that the bulls are able to stay resilient and remain above that 5720 area. And then the level beyond that would be an area that that did a very, very good job keeping a lid on price last week, right? What do I mean? First off, we're going to do the 200-day moving average, right? You could see that on SPY, this previous time that the bulls had control from mid-March to last week, they rallied price right into that 200-day moving average on both SPY and QQQ. QQQ didn't quite hit there, but it got pretty damn close. As well as the anchored VWAP on QQQ as well. So stemming from the all-time high on QQQ, if you drop an anchored VWAP, you could see that's exactly where price rallied into before coming off in a pretty big manner. Okay, so going forward, if the S&P continues to sustain value beyond today's move, and we start holding value over 5650 and then 5720, the next level beyond that would be the 200-day moving average on SPY and QQQ, as well as if you want to throw in that that anchored VWAP as well. Okay, to the downside, right? If today marked another turning point in the market where we've seen many of these instances where you'll have really nice strong days, right? These green candles here, you'll see really nice buying pressure on some of these days, but they don't last for more than a single session. Okay, so will today's action end up like that, where we had really nice buying pressure from early morning to late afternoon? Will this start to roll over again like those other examples did? No one knows that. But if it does start to roll over again, the key important area to the downside would be that 5561 level again, which was the March 13th low. And then beyond that is that trend line that I continue to draw on a lot of these videos. Okay, so that's the next level down if this 5560 area gets broken on the S&P 500 futures. So that next level down would be right around, call it 5475-ish at the time of me making this video. So definitely some key areas to look at going forward. It's all about really gauging price action and gauging sentiment around key areas where a lot of the in-between action around those areas don't really mean much to me. So I try my best to really gauge price action at these key areas to get an understanding of whether or not bulls or bears are in control for the time being. Going into events this week, tomorrow we have ISM manufacturing. Wednesday you have the Liberation Day, right? That's when the reciprocal tariffs are announced, and hopefully we'll get a fuller view of the administration's trade policies and begin to determine the outlook for stocks and other assets. Then Thursday you have jobless claims as well as ISM services, and then Friday you have the jobs report, which is a very important event as well. So there can definitely be some nice volatility. And hopefully we get some good, different scenarios that, or trade setups that present themselves that have good risk reward and are worthwhile to put some money behind. But like I said, these are the levels that I will be watching price action around, and if I see a good setup heading into some of these levels, I will gladly put some money on behind the trade idea and systematically manage the trade from there. Okay, so hopefully this video was helpful, and if you like it, give it a thumbs up, If you like the content, please let me know. Feedback is always appreciated. I appreciate all the support. And as this channel grows, it'll boost my confidence in terms of this whole video production stuff. And I'll definitely bring more value and use the resources from the professional side of things to provide to my audience. So hopefully we continue to grow as a channel, and that's that. So if anything else comes up, maybe I'll jump on here again between now and the next time, and that's it. Peace.